Okay, so you've had a chance to hear some professional traders talk about what they're looking for in our space for institutional money to come in order to trade with real volume. As they say, liquidity begets liquidity. What I wanted to do was actually dive a little bit more into the tools that we use. As you guys know, Dave pulls double duty as our COO at Kenetic, but also the co-founder at Caspian. Dave, could you give us a little bit more about your background in trading and so on?
Sure. Yeah. So as I mentioned earlier, I used to run trading for a hedge fund called Oxid Capital. The portfolio that we ran there was largely equity based, but we used a lot of index futures, index options, commodities, FX, etc. And anyone that's sort of been in finance in an institutional setting will have a good handle and understanding of all of the technology needs that you ultimately have when you're managing such a portfolio. And that really starts with the ability to have a trade blotter in front of you that's connected to all of your various counterparts, through which you can see your real-time trading fills as they come in. You can see what your performance is like. Maybe you're trading through an algorithm. Maybe you're trading with a voice broker. And ultimately, you want to have all of that information stream into a portfolio and risk management system so you can effectively monitor all of your positions. So coming into Kenetic, we have a number of different business lines, and some of those business lines are asset management, so running portfolios. We have principal trading strategies, so a lot of quant strategies, and then as well we have a markets business where we service clients by providing OTC liquidity as well as treasury management solutions. And there are numerous challenges, technology challenges with all of these business lines, not the least of which is actually being able to connect to all of the various exchanges that we trade on and monitor that risk. So Caspian was really an attempt to address all of those needs that we have in our business, but as well address a lot of the needs that the industry has as it goes through this institutionalization phase.
You're talking a bit about quantitative strategies. What I'd like to know is if you're using a platform of any kind, how does that liberate your trading strategy? How does that open things up as opposed to doing everything now manually, multiple interfaces? How does a platform liberate you?
Well, a number of ways. I guess in the crypto space, it's a very fragmented market in terms of where you can actually find liquidity. If you are, a traditional trader in the traditional market, you want to buy a stock that's listed on the Hong Kong Stock Exchange, well, that's where you go, the Hong Kong Stock Exchange. However, if you want to trade Bitcoin or Ether, there are over 200 crypto exchanges now. Some have better liquidity than others, obviously, but the market links to such exchanges are quite varied. There's Fix API, there's WebSockets, there's REST API, and the sophistication of some of these exchanges are really, not as high as they would be on the NYSE or TSE. So inevitably, a lot of these market links break, and if you are a fund or a trader managing all of this, you need a fairly sophisticated team of developers to make sure that your market links are always robust and you can actually trade effectively. So by using a tool like Caspian, it's essentially outsourcing all of that development work onto ourselves to take a lot of the pain out of actually executing trades.
So in the previous panel, Justin talked about how, well, first of all, we talked about how the liquidity begets liquidity, but I think trust also begets liquidity. What can platforms like Caspian do to engender the trust that institutions need to, not so much trust their assets with them, but to execute their trades, manage their portfolio, and manage their data?
Yeah, I think there's a number of areas, right? Anyone who's managing money faces all the same issues in terms of, you have all of the stakeholders that you need to address. So if that's externally, one of the big issues is even dealing with the fund administrator, having accurate books and records. So, Caspian as a tool, because it captures the entire trade life cycle, makes that whole process a lot more robust and sort of takes the pain out of that whole side of the business. Then, as I mentioned, the access to liquidity. So whilst we're building all of the market links to exchanges, what we're also doing is building an ecosystem of all of the trusted service providers. So, when you sort of think about trust, it's like if you're entering the space, you need to do all the due diligence on, well, who are the good service providers out there? And inevitably, that's quite an exhaustive process. So what we're trying to do with Caspian is align ourselves with all of the top tier brands out there and ultimately have their solutions plug into the system as well. So, one such partner, which I can announce today, we're about to do a press release, is with Noble Bank in the US, which is a bank that serves a lot of people who trade on crypto, a lot of OTC desks and funds, etc. So we're going to integrate their front-end solution into Caspian. So effectively, if you both bank with Noble Bank and you're trading through Caspian, it can all happen real time in terms of executing the trade and seeing the flow of funds and coins. So and as well, we're integrating with different custody solutions and other OTC providers. So the idea when you sort of think about trust is we are trying to take that pain out and that due diligence challenge that a lot of incoming market participants face, to essentially give a trusted network to them that they can ultimately run their business through.
Now, when you're talking about ecosystem, obviously one of the biggest, most important parts of that ecosystem are exchanges. So what are the things that you look for with exchanges to be able to work with trading platforms like this to perform better for the end user or the customer?
Yeah, so I think there's different aspects of this, right? I think right now, if you're trading through an exchange interface, you have limited ways in how you can actually execute an order. So, what Caspian's providing is a suite of algorithms, ultimately, that you can use to route your orders. That would then go through a smart order router and route it into the various different exchanges. So, when we think about the exchanges that we like working with, it's ones that actually have great liquidity pools, great API connections, and as well are looking to work closely with us. So when we fine-tune our algorithms, we're actually going to get the best execution and trade performance on their exchanges. So there's a concept in traditional finance called trade cost analysis, TCA, which doesn't necessarily apply so much in crypto because it's not really an industry standard, but the more the space gets institutionalized, the more you're going to see TCA come into play. So I think working with exchanges that really grasp the whole institutionalization of the space and want to work with vendors such as ourselves really is beneficial to ultimately the quality of liquidity coming in and how the space is going to evolve.
So I'm starting my own crypto hedge fund. I have quantitative strategies. I'm thinking about getting a platform so that I can do this very effectively. But what am I looking for to be in a platform that will help me be successful?
Well, it's really being able to manage the full life cycle of the trade. So people always ask us, who are your competitors? And really, we kind of have competitors, but all of the competitors are really only focusing on one aspect of what we're doing. That's the front end, the order and execution management piece, i.e. being able to create a trade blotter and then route to multiple exchanges and see those fills come back. But no one has actually built, outside of ourselves, has built a tool that actually focuses on the downstream as well. So taking all of that trade data and populating your portfolio and risk management system. So meaning that if you are a proprietary trading desk and you have a number of different traders across different portfolios or risk buckets, being able to tag those trades into different portfolios so you can then see your risk on a portfolio basis and run various different stress tests across that. So it's really that whole upstream and downstream component that Caspian is able to address in one elegant solution.
So you're saying I get out of my mom's basement, I start trading with other traders, I hire some folks, and you're saying that I can manage my risk with a desk full of traders?
Yes.
That's awesome. So how does that work? I mean, like, how do I keep them from, making some kind of Nick Gleason trade or something? Like, how do I avoid that?
So yeah, so one aspect of the system is we have a compliance module whereby you can set various different risk limits. So a particular trader may only be able to trade a certain percentage of a volume in a particular instrument, or they might be unable to trade an instrument that trades over a certain amount of realized volatility. So really, whatever parameters you'd like to set in, a compliance or risk manager can set in the system to ensure that the portfolio managers or traders don't overstep those boundaries and don't go outside the mandate of the fund.
Gotcha. And TCA is not going to tell me whether my traders are necessarily going in and out of bounds. Is TCA really about telling me if the algos are working or if I'm getting the best performance in terms of how the order is being sliced?
Yeah, it's ultimately about performance. So again, in the traditional world, there's this concept of what they call VWAP, volume weighted average price. And typically, a broker will sort of be expected to beat VWAP, especially for like an index tracking fund that sort of sets its NAV at a certain point in time. And so the algorithm that you're ultimately deploying is one that either wants to meet or beat VWAP, by way of example. So as the crypto space evolves, I think a lot of these standards are going to be imported in, especially if we want to appeal to institutional investors, because this whole concept of best execution is something will get more and more relevant in the space. So right now, I don't think it really applies because we're not quite there yet. But certainly if the space evolves, I think that's the direction we'll be heading.
Gotcha. And now, I'm a recovering user experience designer. So when I'm thinking about a platform, I want something that's easy to use. I want something that where I can find everything. What should I be looking for in terms of a platform? Because I imagine there's a lot to look at in terms of data, order book, blotter, everything that you mentioned. What makes a platform effective from a user experience perspective?
It really depends on what you're trying to solve for. I think for a traditional portfolio or a vanilla portfolio, you essentially want to be able to see something in a very elegant user interface, so you're not having to have multiple different exchange user interfaces to trade across, or the challenges and limitations of trading through Excel with Python scripts, etc., don't really allow you to have that complete solution. So you want something that ultimately addresses all of the various needs that you have. So that can be on the front end, it can be on the back end, but as well you want something that you can actually generate reports as well in a way that satiates the needs of both internal stakeholders, external stakeholders. So I think depending on which part of the or where you sit, whether you're a fund or proprietary trader, you just need to go through a checklist of what your needs are. And really, because Caspian is essentially the Tora trading system repurposed for crypto, we've already thought of all of these things that institutional asset managers need. So the tools are already there and in place. So it really does cater to a variety of different end users.
That's great. I think we have time for a few questions from the audience. Anybody have any questions for Dave?
So I'm just wondering, how does custody work on Caspian, and where does my money live when I'm using Caspian as a user?
Sure. So Caspian is not a custodian. So think of Caspian as more of a portal. So if you are trading on, say, Binance, Gemini, and BitMEX, you will still need to onboard with those exchanges, and then we will essentially build the market links between yourself and the exchange via Caspian. In terms of the actual custody of that asset, you will still need to manage that separately. So what we're doing is we're working with custody providers to essentially integrate their solution into our interface via API, so you can manage all of that in the same sphere, but we are not we are never a counterpart on any trades. So you will still need to transfer coins on and off exchange. through whatever custody solution that you have set up. But obviously, we will integrate some preferred custodians into our platform.
But I'm correct in thinking that I'll need to give you access to my API keys, meaning that if somebody hacks you.
Yeah, so we've come up with an elegant solution whereby the actual end customer will have proprietorship over the API keys. So if Caspian system gets hacked, the user's API keys will not will be safe ultimately. So we have a technical paper that goes into deeper detail on that, and my CTO is probably best equipped to answer the specifics on how that works. But rest assured, we've spent a lot of time on that specifically to ensure that that the Caspian framework is very secure in that regard.
Any other questions? Yeah.
How does it work from a speed point of view? Like, if I'm running a small hedge fund trading on several of the exchanges that you use, and I have built up WebSocket API connections with them, if we start using you as a service, is it not like I'm going through your API and then you're going through their API, so necessarily my orders take longer when speed is one of the most important factors?
Yeah, I think, if you're like a jump trading or a Jane Street, the reality is in these latency type strategies, Caspian will be good, but it's not really designed to really address like high frequency trading. It is more for long short type strategies. Sort of it's not designed for those type of strategies. Over time, as we build in more co-location services, and that actually becomes, I think that clients will ultimately demand, the latency will improve. But if your strategy is high frequency trading, we're not quite there yet. We will get there eventually. But I think, as you can appreciate, all the various different challenges in just even building the market data links and having everything flow seamlessly through the system, it's going to take a while to really address all of those latency issues.
Anyone else want to stump Dave? Any other questions? Everybody, let's give Dave a big round of applause. Thank you.